eco data really affecting the FX space and the dollar. The dollar rallied against major currencies today after a report this morning showed the world's largest economy shrank in the first quarter. Worse than market expectations, but better than the absolute dire predictions that some of the big banks had out there. GDP fell 0.3% in the first quarter. And again, there seemed to be a surge in imports that was trying to front load purchases ahead of the administration's implementation of tariffs on most goods. Interesting expectations, as the consensus for this forecast was for a 0.3% rise. Now, Goldman Sachs, however, had a forecast of a 0.8% drop, and JP Morgan predicted a drop of 1.75%. And the dollar extended its gains versus the yen, versus the euro, and also versus the sterling. But what I'm really looking at are rate futures. They continue to point to the Fed starting to cut rates in June. Total of 4 quarter-point reductions are likely, bringing the rate to the 3.25%, 3.5% range by year end. Now, looking at the US dollar, Canadian dollar. Canadian dollar sank earlier this month, but has since really pretty much been steady around 1.3846. Both the dollar and the Canadian dollar dropped among recession fears and the sell-off in U.S. equities. But the recent easing of trade tensions, that has really strengthened the dollar versus the Canadian dollar. And today, we're seeing the Canadian dollar down about 0.3%. And if this area doesn't hold, I'm looking for the potential drop to get about the 1.36 level.